and welcome to Business Incorporated live on Channels Television, where we'll be tracking the markets, the economy, and definitely we'll see all that affects your pockets. Here are the stories that matter to you. World Bank rejects Kenya's emergency loan request. Afreximbank regains investment grade rating as S&P lifts lender to BBB+. And Nigeria moves to end export reject. And great to have you join us this hour. I am Will Ibang. As always, let's get a check-in on commodities markets. We begin with oil prices, where we see that hitting a 3-month low after the U.S.-Iran deal. And this is also as tanker bosses, they remain cautious on the Strait of Hormuz. Let's see natural gas prices. That was down 1.49% to $3.19. And we also see Brent crude that was up reversely 2.45% to $81, reversing the losses we saw yesterday, $81.13 per barrel. WTI crude that was down massively 2.55% to $78.69 a barrel. Brent, however, just to be honest, the Brent is down 2.45%. That was the graphics person being very optimistic there about oil prices, but we'll see that in the red, not in the green. Well, let's move on to metals now. We'll see what's going on there. Gold prices that firmed as the U.S.-Iran deal cools. The rate hikes, the bets are that the Fed is going to possibly cut rates, and so we see gold prices firming up there. So our spot gold, we see that up 0.32% at $4,365.30 per ounce. Spot silver also in the green, 0.46% up. Platinum also up. Palladium and copper, however, that's the outlier there, down 0.12% at $6,488 per ounce. And now let's check in on other commodities now. On ginger, we've seen a sharp increase in ginger prices in Nigeria. A single piece of ginger now sells for about 1,000 naira. That's a 100% increase from 500 naira in 2025. Let's get this update from FDC analyst Doluwamu Adeitan. Dolu, what are the key factors driving the sharp increase in ginger prices right now?
Good afternoon, Will. Thanks for having me. Yes, it's very true that ginger prices are up. Okay, as I said, as of last year, this time last year, ginger prices were about 250 to 500, depending on the size you were going for. But as of today, it's 1,000 naira for a moderately sized piece of ginger, which is about the 100% to 300% increase in the price of ginger. And this is interesting, considering the fact that Nigeria is the 3rd largest producer of ginger globally, which begs the question of why. Okay. Yeah, so as we see, the price of ginger are up due to different factors, and these are majorly supply factors. Okay, the demand for ginger is relatively stable due to its usefulness in things like drinks and beverages such as zobo, ginger beer, and ginger tea. Okay, and things like biscuits and all the likes. All right. But looking on the supply side, there are some factors that are actually plaguing the supply of ginger. Number one being the outbreak of a disease called the ginger blight, which became a serious issue in 2023. Okay. It has caused major losses down from 2023 up till this point.
Definitely.
And if
Definitely, Doluwamu. We do know that ginger prices, we go to the market, it's quite expensive. We can't make our spicy drinks and, the healthy drinks we like to take, especially now. We hope that the prices rebound. We'll be tracking those markets. I'm sure you guys will be tracking the markets and keep us up to date about what's happening next. Thank you so much, Doluwamu Adeitan, analyst with FDC, for sharing that update with us. Now, let's move on to other stories seen in the African space, the World Bank has rejected Kenya's request for emergency financial support, but is considering a separate lending package worth about 97 billion Kenyan shillings for Nairobi. Now, the emergency funding was aimed at cushioning the economy against external shocks, but the bank declined the request while keeping talks open on a development policy loan. Kenya is seeking additional budget support as it faces pressure on foreign reserves and rising debt servicing costs. Next, we see that the Afreximbank has regained investment grade status after S&P Global Ratings upgraded the lender to BBB plus with a stable outlook. S&P cited the bank's strong balance sheet and expanding role in African trade and development financing. The upgrade is expected to lower borrowing costs and strengthen its capacity to raise funds for lending across Africa. Now, despite concerns around the exposure to sovereign debt risk in some restructuring economies, S&P said strong shareholder support helped reinforce the bank's credit profile. And next, we see the federal government in Nigeria set up a technical working group to address the repeated rejection of Nigerian agricultural exports, and this is due to high pesticide residues and failures to meet international food safety standards. The Minister of State for Agriculture and Food Security, Senator Aliyu Abdullahi, said the move is part of the renewed hope agenda and a significant milestone in government's push for food safety and export competitiveness. He also notes one particular thing: that Nigeria loses over $362 million annually because many farm products failed the maximum residue limit test and other sanitary requirements abroad. Let's take a listen.
In terms of economic impact, Nigeria loses roughly $362.5 million annually due to the ban on certain agricultural exports, in particular beans in this case. This definitely is a call for concern. And in terms of food safety risk, improper pesticide application, overuse or premature application before harvest leads to significant residue accumulation in food items, affecting both farmers and consumers. The health consequences are that chronic exposure is linked to cancer, organ damage, and birth defects. This is a Nigerian problem, and as a Nigerian problem, it requires the whole of government approach.
We hope to see a whole different approach to our exports. But now we'll take a quick break. Business Incorporated continues right after. Welcome back. Let's get a check-in on equities market now in Africa, with some mixed trading in major stock markets. With a trade in Africa, especially in the Nigeria's NGX, down 0.07% at intraday, 243,107 points, and 100 points. And we see the JSC in South Africa, that's up. However, at intraday, 2.51% at 115,556. And let's look at Egypt's EGX at intraday is down more than 0.5%, 0.51%, 52,234 points. Monday, we saw the Kenya stock market trading in the green, up 1.11% and taking it to 211 points. But let's check in now, get a deeper dive now what's happening on the NGX. And Mukhtar Mohammed, CEO Finance with Mukhtar, joins us to give us an overview of that. Mukhtar, good to have you join us. Good afternoon. Let's just dive in very quickly. What's driving the negative sentiments we're seeing right now on the NGX?
Well, it is largely driven by high cap stocks like Seplat and Paradel. And also the banking sector also is dragging the index down, with market coming down from stock like Zenith Bank and also GTCO and even Access Bank. So it's what are driving them. I think like they're driven by large cap stock coming down.
Okay, so the nature of large cap stocks, are we talking about the banking stocks here? Are they one of the stocks that are driving the markets in the negative territory? Because we did see that CBN's new rules on holdcos last week, that came out last week, Thursday, and we know that the CBN's view is that they need stronger control over these holdcos to prevent financial risk and protect the depositors. But there's a legal concern here. Is CBN over-exceeding the powers given under BOFIA? Are they over-regulating beyond the legal boundaries?
They're over-regulating, if you ask me, because they are the one that told banks to have subsidiary and make that subsidiary into holdco, and they are coming back now to say, look, we have to regulate those holdco. And remember that a lot of banks, when they find it very difficult to pay dividend through their banking subsidiary, normally pay through the holdco because of these challenges, regulatory challenges that they normally have. So definitely, if you look at that, what they are saying now, definitely, I mean, they are trying to extend their boundaries into steep and very strong, stringent management of the bank, which for me, I think is not good for the Nigeria economy, especially when you look at those portfolio investment that have driven the Nigerian economy to where it is today. It's not good for us. A lot of the people that invested in the bank, which the CBN attributed about 27%, came from foreign investment. It did not invest into just the bank. They're looking at the holdco as a structure. And some of them are looking at it in terms of the regulatory framework that some of these banks have to go through, but the holdco are a larger picture and a one-stop shop. So for me, yes, that is not really what is dragging the market. If you look at if you want to look at that, you would have seen that a bank like GTCO and even Stanbic is selling at midday trading at 1,170, should be going lower. But I think it's a regulatory framework that might go through judicial processes if it's not handled in time. But thank God it's a proposal, so hopefully the proposal will be dealt with, and they should look at the concerns, especially from shareholders, not necessarily just from the banks themselves.
Okay, so come July the 9th, when stakeholders are going to be meeting with the CBN to discuss this, what do you think is going to be the outcome of this? What do you think will come out of this meeting?
I wish I have a crystal ball to see the outcome. I think what a lot of stakeholders will do, they will ask for time, because why the rush? I mean, why the rush? Just giving 10 days for an important thing like that. I think a lot of stakeholders will definitely ask for time to look at this document very well, to scrutinize it, to look at the legal framework, to look at how it works, and also to give the bank space to breathe, in case most of them might be thinking of exiting some of these holdco if it's becoming a hurdle. So there's a lot. I don't think 1 day is enough for them. Even 10 days is not enough. And sometimes we see that maybe the regulators know what we don't know. I don't see the rush in this. If you are saying, okay, we are looking at this for the next 3 months, for the next 6 months, then it will give us a lot of us more room to look at it critically. Because what it might mean that some banks may have to go to the market to raise more money, and that also will cause shareholder dilution, and that also could affect the market going forward. Remember that capital gain tax, I dragged the share at that time down by almost $1 trillion. This is another issue to watch closely. Otherwise, we could see the market losing the kind of momentum it has gained, especially through the banking recapitalization. I think there should not be haste. We should look at it. But if you ask me, if we mean that, I don't think we should come out with a conclusion. Everybody should look at it, then look at the legality of it, and also look at that you can synergize that with the profile, which is the normal one that the banks are able to see how they can come together, and then finding a common front on how to address this. But I think the time frame is too short.
Yeah, definitely. One of the concerns was that it was in conflict with the Bofia law already. So we just hope to see the outcome come July the 9th. Now, United Capital has bought a 5% stake in the NGX group, which is the NGX, everyone knows, is the company that owns and runs the stock market in Nigeria. What does this mean for the stock market? Because this is like buying into the engine room of the stock market, don't you think?
I think, Will, you hit the nail on the head, and I'm sure United Capital have been very smart in the sense that you are looking at some of those big listings that will be coming onto the NGX, especially Dangote finally listing, and how that will post the kind of revenue the NGX will have, and they are beginning to say, let us position ourselves. I think it's a good move. It's diversification, and that brings me back to this holding structure. Remember, before that, United Capital came out of UBA, and they have United Capital come out from UBA Potential Registrar, and also Afreximbank Property. So we might also begin to see where banks will say, you know what, we might just begin to give shareholders from some of these holding companies and let the bank stand alone, like what UBA is doing. But good move from United Capital, and to see that green light. But again, the market has not responded positively to that yet. Hopefully, when more detail comes in. And don't forget that United Capital is not just partnering 5% stake in the NGX alone. They have been expanding their brand around Africa for a while. So it's a company to watch.
Definitely a company to watch. Big players back in the system that runs the market. Thank you so much, Mukhtar Mohammed, CEO Finance with Mukhtar, for your insights on Business Incorporated. Great to have you.
Thank you for having me, Will.
And let's check in with other markets now. Middle East, Abu Dhabi, we see that in the green, 1.77% at intraday. And this is coming on the back of the deal between US and Iran. That's a good one, positive for the market. Abu Dhabi also up 1.67%. Let's look at other markets in the region. Saudi Arabia, that was up. We see that in Saudi Arabia very quickly. We see that up 0.48%. Qatar index, that was down 0.02%. Outlier there. Now, U.S. markets, stock futures, there were little change today in pre-market trading, while SpaceX, we saw that building on its monster post-IPO rally, and that's after the Dow Jones Industrial Average climbed to a fresh record high during the previous session, thanks to that potential deal between the U.S. and Iran. Dow Jones, see that up 0.09%, S&P futures 0.03% up, and the Nasdaq 0.19%. Now, SpaceX, that popped 8% in pre-market trading, adding to a sharp gain since going public last week. The company priced its initial public offering at $135. Is trading around $208 before the bell. That's 54% above price. Asia markets now, that closed mostly higher. Japan's Nikkei 225, that briefly touched 70,000 points. And this comes after Japan hiked rates for the first time in 31 years. So markets are really reacting to that. Now, South Korea, we see that jumping 2.11%. Hang Seng in China down 1.4%. Mainland China, that is Shanghai, that's also down about 0.1%. But the Nifty 50 in India, that is up 0.57%. Now let's go now to Berlin. See if we look at how EU markets are trading today. Deutsche Welle correspondent Chiponda Chimbelu has been keeping an eye on them. Chip, what's going on there?
Well, European markets are gaining today after the Pan-European Stock 600 reached a record high on Monday. Investors here are still cheering news that the United States and Iran have reached a deal to end the Iran war. And the Stock 600 is actually up around 0.4%, and the DAX is up around the same level at 0.5%. And shares here are mostly being supported by the drop in crude prices that we've seen, which have fallen from the $100 plus level in recent weeks, the $100 plus levels that we've been seeing, to around $80 a barrel, which was just today. So it's not quite yet where it was before the war, which was around $70 a barrel, but it has fallen quite steeply in recent days. Now, despite that market share, experts are warning that negotiations between the United States and Iran could actually continue over the coming 60 days, so for around 2 months, because of course there is still a lot of uncertainty remaining despite the positive sentiment that we are seeing on markets. And here in Europe, politicians are definitely taking a more cautious stance in their response to the US-Iran deal, which is of course expected to be signed this Friday. European leaders are actually concerned about whether it is actually realistic to expect that the Strait of Hormuz will reopen on Friday, as President Trump has been saying.
So, but what exactly are the EU leaders worried about here?
Well, the European leaders are concerned about whether a potential ceasefire agreement will hold, and they also have more practical questions about what happens after that, because of course European countries too may have to contribute to efforts linked to getting oil and gas flowing through the Strait of Hormuz. So European leaders want to know exactly what was agreed between the United States and Iran before they commit to any demining missions and patrols in the Strait of Hormuz. And that's according to reports that we are seeing coming in from the G7 meeting in France, where US President Trump is meeting with the leaders of the G7 group of nations, which includes, of course, Germany, France, and Italy. Now, reportedly, there appears to be some difficulty on agreeing on a shared position and, of course, an agreement on how to proceed. So basically also talking about the role that European countries can play once the US-Iran deal is signed could also help with the implementation of a ceasefire.
But so if the strait doesn't reopen immediately, what impact could we possibly see this US-Iran deal having on EU economies?
Exactly. There are still concerns over the medium to long-term impact of the Iran war and whether the ceasefire will hold, like I mentioned, and of course what all of this could mean also for inflation levels here in Europe, and that is why European leaders aren't overly optimistic. Now, yesterday during the Euro Finance Summit here in Germany, in Frankfurt, the president of the European Central Bank, Christine Lagarde, and Bundesbank President Joachim Nagel expressed cautious optimism, and the head of the German Central Bank said that it will take months for the transportation of oil supplies via the Strait of Hormuz to normalize. Now, production facilities in the Middle East have, of course, been damaged or shut down during the Iran war, so it would take some time before production can be ramped up to pre-Iran war levels. We don't really have a real sense also of the effect of the Iran war on inflation here in Europe, because its impact has been cushioned by fiscal measures aimed at lowering energy prices. So the expectation is that inflation could still remain sticky here in Europe once those fiscal measures expire.
Thank you so much, Chiponda Chimbelu, Deutsche Welle correspondent right there in Berlin, for sharing your perspectives. Always good to have you.
Thanks, Will.
So let's check in now with the crypto markets and see how they're doing, especially now that we see oil prices down, US-Iran reaching a deal. We'll see that signing on Friday. Expectations are high, but let's see. Bitcoin is down 0.05% at $66,384. That's not a good sign. Well, markets definitely react when oil prices are down. But we see Ethereum up at 0.89%. XRP is also up. Solana up, BNB, TRX. Let's see if Doge is up. Doge is up. SpaceX is up. So Doge is definitely going to be, pumping from that momentum right now. So we see other pockets of red there. But all in all, it's not a bad market, especially. But Bitcoin is down. So I think that's a bad one for those holding the stocks at this moment. The stable coin at this moment. But that's all we have for the crypto space, and also from Business Incorporated. To join us tomorrow for another edition. I'm Will Ibang. Bye for now.